9 last minute tax saving tips for your business. Hello everyone and welcome to Novarise, your channel for financial education. So today it's a very special episode. As we are approaching year end, I decided to create an episode to help you save the most on your taxes with last minute tips that you can implement. And if you're tuning in at a different time of the year, call it at the beginning of the year, the middle of the year, it doesn't matter because it is always a good time for you to save on taxes. So let's just go ahead and dive into 9 different tips that I've come up to help you maximize your tax savings so you can enjoy the money in your pocket and also have enough to reinvest it back into your business. But before we proceed, make sure you hit the subscribe button right here so you can get access to more videos like this in the future. So right now, let's go ahead and get started with today's class. So before we dive into the different points, whatever I'm about to share you can only work if you have an established business, right? And what do I mean by having an established business? I'm talking about a business that has been legally formed, call it as a corporation, it could be an LLC, or it can even be a sole proprietorship. Now, I want you to keep in mind that some of the tips are more friendly towards corporations and LLCs than to sole proprietorships. And why is that? Well, it's just simply because when you have a corporation or an LLC, those are viewed as a standalone business. But when you have a sole proprietorship, this type of business is usually attached to your name and sometimes can be viewed by the IRS as if it's not separate from yourself. So bear that in mind. And when in doubt, always check with your accountant. Okay. So once again, make sure your business is legally formed. If you haven't formed that already, make sure you check up with your state to make sure how you can incorporate your business, call it as a corporation or an LLC. Now, let's just dive into tip number 1. What can you do to maximize on your taxes so you can save the most money as possible? And that is upgrading your office furniture or equipment. So an example of that could be, let's say office furniture, we call them chairs, and maybe you have a desk that you want to upgrade, maybe computers, if we're going to count those as pieces of equipment. And those are very important because all of these are smart expenses, right? Very important. So what are smart expenses? We're talking about expenses that can give you a tax deduction on your business. And when you're getting a tax deduction, you're actually saving money, but it can also help you save money without you necessarily having to spend money. And that is through depreciation. Okay. Now, there are 2 ways for you to do depreciation. One is through, I like to call it the regular way. And then there's also the accelerated depreciation, which can help you save you more money today. Now, for those who don't know what I'm talking about in terms of regular or accelerated depreciation, here's a video that I released not too long ago where I talked about the differences between the 2. Now, let's move on to tip number 2, and that is paying your invoices or your merchants before the end of the year. What do I mean by that? Well, I'm sure that a lot of you have probably purchased inventory for your business, sometimes even purchased for services. And by the time you get the invoices, you'll see terms that says something like net 30 or perhaps next 60 or next 90, right? And for those who are brand new to this, what do I mean by net 30, 60, or 90? That means that you have up to 30 days, 60 days, or 90 days from the receipt of the product and services to pay the bill. And if you're like most business, and I include myself in the equation, we typically wait until the very last minute to pay for those invoices. Why? Because we want to make sure that we have the maximum amount of liquidity possible in our business. But now that we have reached year end, sometimes you want to maximize the amount of expenses as possible so you can reduce your taxable income. And instead of waiting until next year to pay it, you should pay it this year. So let's say, for example, that you got some type of services that was delivered to you on December 15th, right? So let's say, for example, if you're on a net net 30 invoice, that means more or less your invoice will be due on January 15th. But if you're waiting till January 15th, that means your expenses will be deducted on the following year, which is in this case 2022. So instead of waiting until next year to make the payment, why not go ahead and do it before the end of the year, which is before, December 30th. So that way you can take the deduction today, right? Today, this year, whatever you want to call it, right? And that way you can maximize your deduction and help reduce your taxable income for this current year. Now, tip number 3, that is investing in courses or trainings or maybe even software updates this year. So what do I mean by that? So let's say, for example, you have, this new Microsoft Office program that you wanted to upgrade this year, but you were kind of unsure whether you're going to have enough money or not, and you wanted to wait off until the following year to do that. So now that you are reaching the end of the year, you realize, hey, I have some budget available and I want to reduce my taxable income the most I can. So what you can do is that you can go ahead and purchase the upgrade of Microsoft Office, and you don't necessarily have to upgrade it right now. Maybe it's not the right time because you're busy, it's the end of the year and you're trying to get a lot of things done. But what you can is purchase this software update and then schedule it to have it updated the following year. The same thing applies for courses and trainings, which we do that a lot here at NovaRise. Sometimes our team are interested in some editing courses. Some of us are interested in additional investing courses. So instead of waiting until the following year to buy them, we go ahead and we purchase them this year. So that way we can take the deduction this current year, and you can definitely do the same. Now, moving along, and tip number 4 is buying a company vehicle, okay? And this is actually a very popular one. And you got to make sure that you're buying it the proper way, because you want to make sure you're following the steps, that you can maximize your depreciation, your deductions. And for those who are looking to learn about the best way or the correct way to purchase a company vehicle, here's an episode that I released not too long ago that shows you the multiple steps that you can take so that you can maximize on the expenses and the depreciation. This tip right here, buying a company vehicle, is actually one of the most popular ones that business owners take on at the very last minute. In fact, when we went to the Tesla dealership to purchase our company vehicle, we were told by the sales team that the busiest time of the year is usually December 30th and December 31st because everyone is trying to max out on the depreciation. Also, for those who are actually interested to learn how we actually purchase a Tesla car under the company and prove that we're using it 100% of the time for business purposes, here's another episode right here that you can also check out for your information. Now, moving on to tip number 5, and that is investing in a retirement plan. And this is an excellent tool to do that, not only for yourself, but also for your business. Why? Because you're getting tax deductions for it, right? You are also deferring taxes for the future. And it's great for employee retention, because now if you offer a retirement program, you're showing your staff, your team members, that you actually care and that you're also investing in their future. It's not just about your future, but also their future. And they appreciate that. And the beauty about this is that, once again, it is tax deductible. It is also very useful for you as the business owner if your legal entity is set up in a way where you become an employee of the company and you also receive the benefits of the employee retirement program. Now, you might wonder, well, how do I go about this? This is, so new to me, a retirement program. What are my options? Well, that will depend entirely on the size of your company. So let's say, for example, you are a very, very small company of just simply 2 people, right? And usually for these type of companies, we have share ownership, meaning it could be a 50-50 own or 40-60, whatever you call it, but the ownership is share. So for this type of companies, usually what it's best for your case is to invest on a solo 401k or to invest on a SEP IRA. Now, if you are in a position where your company is a lot larger than 2 people, congratulations. There are other programs out there that you can also implement, and those are available for companies that are under 100 people. And for those companies, we have the traditional IRA, and we also have the Roth IRA. This is the one before tax, and this is the one after tax. And the beautiful thing about the IRAs is that you have up to April 15th of the following year to make a contribution. So let's say, for example, if you're watching this video right now on December 30th and you're running around like crazy trying to set up the IRA, don't worry, you still got some time. You can work on setting this up, and you have up to April 15th of the following year to make contributions to your retirement plan. Great stuff, isn't it? Now, let's just go ahead and move on to tip number 6. But before we do that, if you're enjoying this episode, make sure you hit the like button right here down below so you can help others like you looking for information of this kind. Now, tip number 6, hire your kids. I cannot emphasize how many people do not implement this tip, and it's one of the best that you can do because, one, you're training your kids to be responsible for the future, and at the same time, they are earning tax-free income because for every child that you have, you can pay them up to $12,000 a year, and that is tax-free for them, okay? Your kid will be receiving that income tax-free, and you can choose to help them put it aside for their savings or maybe for their college education. And the best part of this is that it is a tax deduction for your business, okay? Now, on the subject of hiring your kids, I want to make sure that we're all on the same page, right? I'm not saying use your kids and do the whole child labor thing. No. There are simple things that you can do to teach your kids about discipline. Let's say, for example, you can have them as office assistant. You can give them, mail that you don't want, junk mail, and then just have them, shred it out or just get rid of it. Some businesses use their kids as models, right? All they got to do is just to post their pictures, and they use the pictures of their children for marketing purposes. All parents love to take pictures of their kids anyway, so might as well just make some money out of it and use those pictures for tax deductions. Now, tip number 7, and it goes along the lines of tip number 5, and that is setting up a retirement account for your child, okay? Yes, you can set up a retirement plan for your kids as soon as they start working for your company, and you can do that through an IRA. Yes, that's great stuff. Now, so let's move on to tip number 8, and that is having a tax plan. Tax planning simply means getting together with your accountant to make sure that you're maximizing your taxes for this year, okay? So you're gonna sit down with him or her and make sure you go over your tax situation. You're gonna talk about the tips that were shared in this channel so you can go one by one to see how you can maximize that and if you can apply that in your current situation. And if not, it's not the end of the world because you are at the perfect timing to start planning for next year. You have to take into consideration that tax planning is not something that happens overnight. It is something that needs to be set up either at the end of the prior year or ideally at the beginning of the year. But if you're tuning in sometime, let's say in May or June, it's not the end of the world. It is still a good time for you to reach out to an accountant to help you set up a plan for your taxes that you can implement throughout the year and also be able to gather the appropriate documentation because, sometimes the IRS like to audit and you don't want to be one of the ones who happen to win the lottery of an audit and not have your paperwork all together. So some of the benefits that you can actually get out of hiring an accountant that can help you with the tax planning are the following. You get to enjoy home office deductions, right? And what are the benefit of the home office deduction? That, well, of course, it is a deduction for your company. And it is also an income, so to speak, that is tax-free for you, right? And if you already have a great accountant and you're implementing this, great, congratulations, you're on to the right path. But there's something else that you can implement in addition to this office deduction, and that is through the Augusta rule, right? So what does the Augusta rule says? It says that you can actually rent out your primary residence for up to 14 days And the reimbursement of the cost of that rental, it's going to be tax-free for you as the homeowner. So you can actually take this in addition to the home office deduction expense, right? Now, I would like to make a point here that remember how at the beginning I said something about you have to be careful with the type of legal entity that you have, because some entities are more friendly towards businesses than others. And in this case, the Augusta rule cannot be applied if you have a sole proprietorship. Why? Because the sole proprietorship is viewed as part of yourself, as opposed to when you have a corporation or an LLC, which is usually perceived as a separate business entity. As you can see, there are a lot of tips out there that our accountants can help us implement. This is not a one do-it-yourself kind of task. So you have to make sure that when you're doing your tax planning and you're trying to maximize everything you can in your tax year, you have to work with the professionals. The tips that we're sharing in this video is not a substitute for a professional. This video was created to help you have an intelligent conversation with the experts so that you know who should be part of your power team and who shouldn't. Now, back to the board. We have tip number 9, but this one has to be implemented outside of your business, okay? Outside of your existing active business, call it a cleaning company, a construction company, a restaurant, a service, whatever is it that you do, because your existing company will most likely be an active business, right? And what we need in this case is to have a passive entity to make this work, because we want to maximize on the tax deductions that we can, right? And now that you got that clear, tip number 9 is just simply buy real estate. I cannot emphasize enough how useful and how great real estate is, because not only you accumulate equity, you can generate cash flow, but it's also great on the tax deduction because of the depreciations that you can take over the span of 27.5 years, or perhaps even more, depending on the type of real estate investment that you are doing. At the same time, you can also take advantage of the operating expenses. You can also deduct those as well. And you also get to deduct mortgage interest that are resulting of the use of other people's money. And thanks to other people's money, you are generating cash flow, but you're also taking advantage of every single deduction out there through the purchase of real estate, call it depreciation, operating expenses, or mortgage interest. Now, I know that by now you probably have a lot of follow-up questions about taxes. I personally am not an accountant myself. What I'm sharing right now in this video are tips that I learned throughout the year by working with my accountant. If you need help looking for one, make sure you just contact him. His name is Henry Aldana, and we have been working together for quite some time, and we'll also create videos together. So if you want to learn more about his services and how he does, here's a video that you can check on the side right here to help you get to know him better. And if you like what he does, you can just simply go ahead and click on the description box below to get in touch with him and set up an appointment with him and work together to maximize those tax savings for you. Best of luck. Bye-bye.